Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Joining us now on this leg of the show is Adenwala, the Managing Director of Capital Portfolio Advisors. Paras, it's always a pleasure to have you on this show. Thank you for taking the time out to be with us. But I want to quickly begin by asking you about the IIP number. It was better than the last one we saw. But does that mean the economy has bottomed up and we're going to see brighter numbers going forward?
No, I wouldn't go by just 1 month's numbers. I think we need to really look at the trend. And if you really split the IIP numbers, the kind of growth rate that we saw in consumer durables and beverages and all, I think those do not seem very realistic. And therefore, I think we need to look at a longer-term trend rather than just 1 month kind of change of number. So I would rather wait for the numbers for the next few months before saying that, okay, fine, things are bottomed out.
I want to move on now to our portfolio question. Every week we pick the portfolio of one lucky viewer and our guest takes a look at your entire portfolio and tells you what you should be holding on to and what you should be selling. Now this week, Venkat is our lucky viewer. He wants to know what changes he should make to his stock portfolio. Long-term holder, Paras. The first on his list is Axis Bank and HDFC Bank. Axis Bank he bought at 11.10. What's your call on Axis Bank right now?
I'm quite positive on Axis Bank. I think the valuations are very much in favor of investors for the kind of growth rates that they notch up and the size. I don't think it's realistic to see a valuation of Axis Bank below that of IndusInd Bank and Yes Bank. So I certainly see re-rating for Axis Bank over the next 12 to 18 months.
All right, HDFC Bank also, we saw those strong numbers come out this week. He bought HDFC Bank at 506 rupees. It ended the week at 586. What's your call?
It's a great bank to own. I think it is a must for every investor's portfolio. You can't trade around in the stock, but you should definitely own it with a longer-term perspective. There are very few companies who keep on compounding at the rate of 30% for the last 15 years. So I think it's an extraordinary stock, and it's a definite buy. If the investor probably, if on a dip, he would want to buy it, I think he can add to his positions.
Add to those positions. LIC Housing Finance at 370. It's down a little bit from there to 62. What's your call on LIC Housing Finance, given its valuations at this point?
Housing finance as a business is doing very well and is defying any slowdown that one may really see in the economy. If you look at the numbers of HDFC, if you look at the numbers that Group Finances declared yesterday, I think the numbers are pretty robust. And taking a cue from those numbers, one needs to be invested into housing finance business.
Hold on to that stock. ONGC, Paras, he's bought it at 282. Given the subsidy burden as well, what's your call on ONGC right now?
ONGC is a retired man stock. It moves at its own pace. It pays very good dividends. But for a growth investor, I think there are better opportunities available.
Getting out of ONGC at this point, Suzlon Energy bought at 25 rupees. Do you think there's a possibility that Suzlon Energy might see a recovery?
Suzlon is clearly fighting many battles, and one of the largest battles that it is fighting right now is to clean up the balance sheet. So until the time we see improvement in the business environment and until the time we see balance sheet getting deleveraged, there is absolutely no point in holding on to Suzlon. I think one should switch to some better stock.
All right, get out of Suzlon Energy. Sesa Goa is one of the stocks on his list. He bought at 192. What's your call on Sesa Goa?
Commodities as a business will face slowdown due to the global slowdown. But my sense is it's largely factored into the prices of Sesa Goa for a long-term investor. If the markets do correct, you will see Sesa Goa coming down from the current level. But if the investment horizon is 12 to 18 months, absolutely no problem. I think we should see a recovery happening in the stock.
And the last on his list is JP Associates, which he bought at 72 rupees. He has 350 shares. What's your call for JP Associates?
It's a volatile stock, and if the investor is a strong-hearted person, I think the business environment will only improve as we move along. It's in the right place. It's in the infrastructure segment. It's also in the cement business. My sense is both these things will improve as we move along. So one should stay invested in Jaiprakash.
Would you like him to add something to give him better diversity at this point?
Sure. I think one can really look at adding into positions of HDFC Bank on a dip. One can also look at buying into Larsen & Toubro again on a dip. I think Larsen & Toubro is clearly a proxy on the Indian economy. So as the economy does well, I think L&T should also do well. And at the current valuations, it's looking pretty cheap.
If you want your portfolio looked at, write to us on the email ID that's at the bottom of your screen. Now, before Paras talks about his recommendation for this week, Paras, I want to talk about Maruti, which you had recommended when it was trading at 1240, and you gave us a target of 1700. That stock ended the week at 1184. Is it still a buy in your book?
Oh, absolutely. I think Maruti will do very well, and it has a great quality of management. It has a significant market share in the markets. It has been impacted because of increasing petrol prices and inadequate capacity in diesel. It is trying to ramp up capacity in diesel, and therefore I think probably FY14 should be significantly better than what one would see in FY13. So it's a definite buy at the current levels.
All right, Maruti is standing by that call of a buy. Remember, if you didn't buy it when it was recommended on the show earlier, now would be a good time. Okay, let's move on to Paras's current stock pick. We're talking about Mayur Uniquoters. Take a look.
Mayur Uniquoters, or MUL, was established in 1994 and is a maker of PVC vinyl, more popularly known as synthetic leather. The company currently manufactures about 2.1 million linear meters of synthetic leather per month, which is used extensively to make bags, shoes, belts, and even car seat covers. MUL's clientele includes some of the biggest brands in these segments like Tata Motors, Maruti Suzuki, and Bata. MUL is also in talks with companies like General Motors and BMW to expand its geographical reach. The company has been reporting strong earnings, with profits for the fourth quarter jumping 67% from last year, while sales grew about 26%. MUL is also one among a large number of small companies that has recently announced a bonus share offer for its investors. The company will give out one bonus share for every 10 shares held. This move has triggered a spike in the stock price, which has already shot up 87% since its low in December last year.
That's an off-beat stock pick. It ended the week at 580 almost. Before we go any further, Paras, do you have a disclaimer to make about this stock?
Yes, I do own the stock and have further interest in the stock, so I would definitely, that's my disclaimer.
All right, so let's talk about that stock. It, of course, is one of the leading manufacturers of synthetic leather, like you told us. But it's a small company. It's not a company that's regularly tracked by a lot of analysts. So there's not a lot of information available about the company for a retail investor. Give us your justification for bringing it up at this point.
The industry has grown at about 20% for the last so many years. And this company has outpaced the industry very, very significantly. It has doubled its turnover in the last 2 years. It caters to some of the best clientele that one would really be wooing for. So, and it's likely to add someone like BMW, Mercedes, very soon into the client list. So I think the company is all set for a very robust growth in not only the domestic market, but also in the international market. The company has a very strong management, which owns 75% in the company. And the last year, the company declared dividends every quarter, indicating robust cash flows. It has a return on capital employed of about 55%, and which itself indicates a huge intrinsic profitability within the business. The company should keep on growing at about 20 to 25% over the next 3 years, thanks to the capital expenditure that it has been incurring. You will see the benefits of all that coming in the next 2 to 3 years.
Now, one of the risks of, obviously, for a business like this is goods coming in from China or goods coming in that are of better valuation. So, what sort of position do you think the company is in right now to take on competition within the space?
I think they have been carefully cutting down the cost of production. On one side, and on the revenue side, they have been improving the product mix by catering to market clients. So my sense is, Chinese competition has been around for a long time, and yet this company has kept on improving margins. So with the improving profile of the company, I think the margins can only improve, and they can jolly well take up the Chinese competition.
All right, if we look at the stock chart of the last year or so, we'll see it's nearly at an all-time high at this point. So from a technical point of view, is this the best time to get in? How much further do you think it's going to go from where it is right now in the short term?
While the past has been very good, being a fundamental analyst and a portfolio manager, I think one has to go by valuation. And for a company that is growing at 20 to 25% at least, if not more, a 6 times PE ratio on FY14 estimates, I think is going very, very cheap for this debt-free and 55% ROI company. So I think one can easily expect, as I mentioned earlier, 30 to 35% appreciation from the current levels, if not more.
All right, fair enough. 30 to 35% from the current levels. Quick question, Paras, for a retail investor on a stock like this, how much of my portfolio should I be dedicating to this stock?
If an investor would like to own just about 5 to 6 stocks, I think anything between 10 to 15% can easily be put into the stock.
After the break, we'll answer some of the questions you sent in during the week on our email and our Facebook pages, so don't go anywhere.